सेव किया था ना?
मैं सिर्फ इसलिए गया था क्योंकि उसने मुझे कॉल किया, that's it. But listen तो.
Save it for someone else.
जिंदगी में सेव करना जरूरी है, मगर जब बात पैसों की हो, सिर्फ सेविंग से काम नहीं चलेगा। इक्विटी म्यूचुअल फंड्स में इन्वेस्ट कीजिए और अपने सेविंग्स को आगे बढ़ने का मौका दीजिए।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Given that we are in the middle of festive season, it may be the right time to see how festive Indians are actually feeling. That is, let's see what the consumer sentiments are. RBI comes out with bi-monthly survey which talks about these sentiments and measures these sentiments. Today we have with us Radhika Pandey, Associate Professor at National Institute of Public Finance and Policy. She will take us through the findings of these data, which seem to be really positive. She will also talk about what this means for the economy and what is driving this trend.
Hi.
Radhika, to start with, could you briefly take us through the findings of this survey, what this survey means, and why do we do this survey?
So this is a survey which is conducted by the Reserve Bank of India. It's a bi-monthly survey. It's called the Consumer Confidence Survey, which is a survey on 6,000 households across 19 cities. So essentially, it is a survey of urban consumers, and it tracks their assessment about the state of the economy, their own employment prospects, their income pattern, their spending pattern, and what is their assessment about price level. So these are the 5 indicators that on the basis of which the RBI comes up with this index, which is called Consumer Confidence Survey Index, which is based on this survey. So here basically people are asked whether they expect economic conditions have improved or not, or whether they are stable or whether they have worsened. So based on the percentage of respondents who say that the economic condition has improved or stable or worsened, they come up with an index value. Okay. So similarly for employment, for income, for spending, and for price level. So these are the 5 indicators on the basis of which the assessment is made. And as I said, this is a bi-monthly survey, and the latest findings are for the month of September. The results were released on 6th of October, but the findings are for the month of September, 2nd to 11th September. So what it shows is that there has been a marked improvement in consumer sentiments. What we saw during COVID time was that there was a sharp slump in consumer confidence, understandably so, because at that time there was a decline in the economic environment, there was a collapse of incomes of people. So consumer confidence index, which used to hover above 100, it fell to around 50, and it remained in that range of around 49 to 64 across the first and the second wave of COVID, and we saw that it started improving only in early 2022. Only from March 2022 we saw an improvement in this index which captures consumer confidence, and since then it has been rising, but the rise has been like 1 point, 2 point, but this time around, the rise has been 4 points. So it's a very sharp jump in consumer sentiments, which has now taken this value of the index to the pre-COVID level. So we are no longer in the COVID situation, the values that are comparable during the COVID time or post-COVID. The numbers suggest that the consumer confidence is similar to what used to prevail during the pre-COVID time, that is during 2018, 2019. So that's the overall finding. And this, when we say consumer confidence index, it is actually 2 type of questions that are being asked in this survey. One is, what is your current assessment of your current economic condition, employment, economy, prices, and one is your future expectation. So actually there are 2 series, and we can talk about each of those separately. So when we talk about this consumer confidence index, it is referring to what is the consumer's assessment of current economic condition and what is their assessment of future across those 5 parameters that we spoke about, which is again the state of the economy, employment, income, the spending pattern, and the price level. So current as well as future.
So before we delve into current and future expectations separately, overall the consumer sentiments have risen.
Yes.
This survey is showing.
Yes.
So what is driving that consumer sentiment? Is it only because that we are in the festive season and that is why we are seeing this upswing?
So, as I said, we look at 5 indicators, and each of those, out of those 5 indicators, what has driven is that there has been an increase in the percentage of respondents who expect that the economic condition is going to improve. Okay, so that is one. Again, we are talking about first the current situation. So there is a sharp increase in optimism around the current economic conditions and also employment prospects. So these are the 2 variables out of 5 which show have seen a sharp improvement in the September round over the July round, and that is also corroborated if we look at some of the employment statistics, which are released by the PLFS, the Periodic Labor Force Survey, which is the official assessment of the employment situation. And if we look at the CMI, the Center for Monitoring Indian Economy, the data on employment, they both show that the unemployment rate has declined. So a useful exercise is to look at the findings of the survey and then look at some of the variables, actual variables. And we do see that there is a coherence between the fact that the unemployment rate has come down. And that is why people in general have become more optimistic about the state of employment in the current situation. So that is the current situation index has improved by 4 points, and that is mainly due to the fact that they have become more optimistic about the 2 variables. One is the economic condition and secondly employment. On spending and on prices, they are more or less, the assessment is similar to what was the July's assessment, because again that is understandable because inflation, though it has declined, still continues to remain elevated. So there is not much movement there. Noteworthy point is that on income, they have become slightly more pessimist as compared to the July number. So, but that relative pessimism is smaller in magnitude as compared to the employment and economic situation optimism. So overall, the index has risen in September round as compared to the July round.
The survey also shows, on spending by consumer, that spending is largely on essential items and not so much on non-essential. So how should we read this?
Yeah, so this is again, so out of the 5 components, one of the component is, as I said, spending. And here again, the data is telling us the question that are asked is spending, what has been your spending on essential items and on non-essential items. So spending on essential item has increased and spending on non-essential item has decreased. It's mainly again due to inflation, because when inflation rises, the ability of people to spend on discretionary items of consumption, that ability declines. Their purchasing power is squeezed and they tend to focus first more on the essential items, the food commodities. And that is again corroborated by data, because we saw that inflation which has risen is mainly due to food inflation. Vegetable prices had risen, cereal prices have risen. So when these prices rise, the proportion of expenditure on these essential items also tend to rise, which is what is reflected in the survey findings.
Can we also link lower spending on non-essential and the pessimism around income? Are these two also linked?
Yeah, that is also another very interesting point. So there is one is your current situation and one is expectation. We come to expectation later. So we are talking about the assessment of these 5 parameters on current situation. There again, they are not too optimistic that their income is going to increase currently. So on current situation basis, the proportion of people who expect that their incomes are going to rise, that proportion is not too high. So that is again linked to the fact that, it's because incomes are not too high, they are limiting their spending on essential items. So yes, spending on essential items not too much of an increase on income, but overall an improvement in the general economic situation and on employment. So these are the essence of this, the findings of the RBI's consumer confidence survey.
Does the survey also give us a view of how has the spending been in urban area, rural area, and what are the sentiments in urban and rural separately?
Yeah, so while the RBI's survey that we spoke about is only referring to the urban areas, as I said, it is covering 6,000 households across 19 cities. Whereas the Center for Monitoring Indian Economy also comes up with a consumer sentiment index, which is capturing both rural as well as urban. Again, like the RBI, there are two components of this survey, which is one is what is the assessment of consumers about the current situation, and the other is what is their expectation. Again, what is their assessment of the economic and business environment, their income in the present situation, that is one series, and the other is expectation. And these both series are available for both rural as well as urban consumers. So that way it becomes more useful to see whether it's the rural consumers that have become more optimistic, or is it the urban consumers, and within that, who are more optimistic as regards the current position? Are they more optimistic only? They expect that situation is going to be better, but currently they are not optimistic. So all these kind of insights can be inferred from the CMI's survey and not from RBI's, because RBI's is only based on the urban consumers that reside in cities.
So, can you elaborate on urban and rural?
Yeah.
Like,
so what we
do
see,
they think about the economy?
Yeah. So here also, as like the RBI survey, the CMI survey also shows a big jump in sentiments overall. Just like the RBI survey, here also there is a jump, and also this is more timely because now on 1st of November we got the data for October also. Like the RBI survey is only till September. The latest round is for the September assessment. But for RBI, for the CMI, we have the September as well as October. And both the months, we have seen an improvement in the consumer sentiment index overall. And this is both the current situation index as well as the expectations index have improved. So it is a broad-based increase. It is not just that the current situation index has improved and not the expectations or vice versa. Both the indicators have improved for both rural and urban. Now, the question is on the magnitude, whether the rural sentiments have improved for the current or for future, and what is the situation for urban. Now here we get a very interesting point that the urban consumers are more optimistic about their current situation. They are not that optimistic about the future expectations. Whereas if we look at the behavior, the pattern of the confidence survey of rural consumers, what we see is that while they are optimistic about current situation, but they are more optimistic about expectation. So that is a kind of a interesting phenomenon that we are seeing, that urban consumers are more optimistic about current and not so much about future, whereas rural are more optimistic about future. And that is again very interesting because rural consumers are always influenced by the sowing pattern, what is going to happen to harvesting. So their perception or sentiment is more driven by the sowing pattern, which is again which comes in future. So that is why we see that they are more optimistic about the future expectation index rather than the current economic condition index, whereas urban are more happy with the current economic conditions as compared to the future. So this is a very interesting phenomenon that we see if we look at the CMI's index. And also if we look at the the RBI's index, if we just compare what happens between the current situation and future, we have seen that overall consumers tend to be more optimistic about future. And that is so even during the pandemic time, when the current economic condition used to be very challenging, at that time also the expectation index used to be above 100 and the current situation index used to be below 50. So there was a time when the difference between these two indices was almost 50 to 60 points. And now what is happening is that while expectation is good, your current situation is improving. So now that this difference is narrowing. So this is a very interesting point that we notice about consumer behavior, that particularly post demonetization, consumers are more optimistic about their future rather than their current situation. And that is visible in both the RBI's as well as the CMI's numbers. In CMI's, we can pin down what kind of consumers, and it's the rural consumers that are more optimistic.
So talking about future expectations, you talked about 5 parameters
Correct.
that we measure them on.
Yeah.
So if we talk about the RBI survey,
Yes.
1 year from now,
Right.
which are the indicators that perform better?
Yeah, so all the indicators are performing better because the overall the expectation index has again jumped to a 4-year high, and it is driven by all the 5 indicators: economic situation, employment, income, spending, as well as the price level. People are optimistic about the expectation on all these 5 parameters. Just that on the prices, they are still relatively concerned. But if we look at the economic situation and employment, they are quite upbeat about those, and that is reflected in the higher expectations number.
Radhika, also, are there any other parameters that we see in real world that can sort of back up this rise in consumer sentiment?
Yeah. So it's very useful to look at, the high frequency indicators, because this survey is telling us, its survey is based on a sample of say 6,000 households, but it also needs to be corroborated by looking at the high frequency indicators, and some of the high frequency indicators are passenger vehicle sales, GST collections, petroleum consumption, what is happening to passengers being handled at the airport. Also look at some of the rural indicators like tractor sales, what is happening to scooter sales. So all these indicators together will tell us the story about what's happening to consumer spending, and whether it's just a one-time boost which is given by festival effect, or is it a phenomenon which is seen across this year. So to decipher this question, what we do is that we look at, now we have first financial year, half of the financial year is completed. Okay, so we have the data for April to September for all these variables that I spoke about. So we compare the April to September number for these variables across 5 years, and we see that for most of these variables they have performed better in the first half cumulatively, because there are monthly volatility, but if we take April to September overall, we see that April to September total sum of say passenger vehicle sales or GST collections, it's been more in 2023-24 as compared to the previous years. It's just one indicator, the tractor sales, again, which is rural, and there is always this concern raised about rural consumption. So that is also reflected in tractor sales. The tractor sales of April to September of this year is lower as compared to last year. So while the urban consumption looks more broad-based, there has been an uptick in most of the indicators of urban consumption, but in rural consumption, we are yet to see a sustained, steady growth rate. So some of the indicators do well, some of the indicators do not do well. There is a volatility. That is why we look at, April to September combined. And then going forward, if we just look at the October number, which were released just on November 1st, we see GST collections are out for September. We see passenger vehicle sales are out for October. All these numbers are also doing well. One is the first half of the current financial year. The sum total of all these variables, it's doing better as compared to the variables in the last 5 years. And for October also, the numbers are better. But the concerns arise on account of 2 variables. One is the PMI, the Purchasing Managers Index of Manufacturing, which was released on 1st November. It showed a decline. It is above 50, so anything above 50 means that it is in the expansionary zone. But the point is that it has come down from the peak value that we saw in the June-July period. We are seeing that it's coming down. So that means that there are some limitations to the demand pattern. And again, the Israel-Hamas war and the elevated inflation somewhere is putting a brake on the demand for manufactured products. So the demand for new orders within the manufacturing sector, though it has picked up, but it has not picked up at a very sharp pace. And therefore, the overall purchasing managers index for manufacturing sector has slightly softened in the month of October. From the rural side, what will be very critical now is the sowing of Rabi. Because if the sowing of Rabi crops takes place on time, that will improve the confidence of rural consumers, and which we have seen currently that they are more optimistic about expectations rather than current situation. So if the sowing happens on time and if there is timely rainfall, that will improve the yield of these crops, and that will have a positive impact on food inflation. So while overall currently till now we don't see the impact of Israel-Hamas war on consumption, but going forward we need to see what happens to oil prices and then what happens to overall consumption. But right now the picture is looking good overall. If we see, there are some concerns, but overall it looks fine.
Since you mentioned the Israel-Hamas war, there's a question that we have from our a member, Aditya. He has asked, Israel-Hamas war will now complete around a month. I know it's too early to comment, but have we started to see impact of that on energy prices, or we are yet to see that, and will it hamper the festive consumption?
Yeah, so as he rightly points out, it is too early, and as of now we have not seen a very visible impact, though overall the global oil prices have risen by 5 to 6% since 8th of October when Hamas attacked Israel. Since then we have seen a increase in global crude oil prices, but if we look at other commodities like metals, there the prices have not increased. So overall, as of now, it is too early to say what will be the impact of the war on the consumer demand, which is expected to pick up during this festival season. But right now we don't see any impact. But if there is an escalation and if Iran and other countries also join, that will act as a major supply side shock, because then the oil prices will be impacted. And if global crude oil prices overshoot to $100 per barrel, that is going to have a very a negative impact. It will dent again consumer sentiments, it will dent consumer spending, and will have an adverse impact on the festive season demand. But currently we are not seeing that thing shaping up, because there was a survey also conducted of some CEOs of companies. As of now, they don't see a very visible impact, but that is again premature. We need to see how it progresses.
Aditya has one more question. He asks, do you think with the festive season around the corner, RBI should think of reducing the repo rate in order to boost consumption?
Reducing the repo rate is not currently on the table. I think it's not on the agenda. What will happen is that the RBI would like to keep the interest rates stable, because even while keeping the interest rate stable, we are seeing that personal loans are rising at a very sharp pace. So normally when would the RBI would want to reduce the interest rate? They would want to reduce the interest rate if bank credit is low, the demand for credit is low. But the demand for credit is very strong, particularly from the households, from personal loans, for real estate, for housing loan. The demand for loan is very strong, and even the latest data shows that bank credit growth is growing at a sharp pace. So in order to keep inflation stable, which is still above the 4% target because the RBI governor has repeatedly reiterated that the target is not 2 to 6%, it is 4%. So they are not just okay with the inflation hovering around 5 to 6%. They would like to see inflation coming down to 4%. And until that happens, we should not expect a reduction in the repo rate, because even without that, we are seeing all our indicators of consumer demand doing well. So in fact, at this time, if we reduce the repo rate, it will lead to, what we spoke about in the previous episode. It could lead to outflows of foreign portfolio investors. It could lead to depreciation of the rupee. So in fact, RBI would like to keep the interest rates high, and they are trying to keep that with other instruments like open market operations. They are saying that they could come up with open market operations to keep the interest rates higher, so that the rupee denominated assets are more attractive. So I don't think the reduction in the repo rate is going to happen, at least in this financial year.
Radhika, in the US as well, there's consumer confidence index, but that has been on a decline. They are also going into festive season. So why is this difference between the US market and the India market?
So there it is happening because there, now the high interest rates has started impacting the consumer's ability to spend. Till now, what was the position was that consumers had their savings because at the time of COVID, a lot of fiscal transfers were made. People had money in their hands, so they could spend. But now all that saving is getting exhausted, and now they have to borrow. And if they have to now borrow, they have to borrow at high interest rate. So that is impacting their consumers, their sentiments or their confidence is not rising, because now somewhere the high interest rate has started to impact their spending. It has started to impact their income, their plan. So that is one important reason. The other important reason, of course, is the Israel-Hamas war and its impact on oil prices, and the fact that the US Federal Reserve governor has again reiterated that, we are not going to cut interest rates anytime soon. So this monetary tightening condition and the fact that global crude oil prices have started to rise again, this has impacted consumer confidence. Even at a time when the US GDP has risen to 4.9%, it's a very strong, high growth number. So while the growth prospects are good, but now this monetary tightening, which has been happening since the early 2022, has now started impacting their spending pattern, and that has now dented their confidence.
Okay. Radhika, we have a question from Sankalp. He's asking, do you think reshuffling GST brackets or items could help people splurge a little extra during the festive season?
Yeah, so ideally, yes, but we know that now that elections are approaching, this rationalization or rejigging of rates is not on the agenda of GST Council. In fact, there was a ministerial group set up to look into this rationalization, and the minister who was in charge, his tenure was over, and the group has not been convened again. So this really shows that as of now, the priority is not towards this, moving some items from the higher tax bracket to the lower tax bracket. Now, I think all these decisions will happen only after the general elections next year. So while in principle it could have boosted, but it is not happening, at least this financial year. It might now happen only after the general elections.
Sure. Sankalp has another question. He asks, for the US, the festive season quarter of Q4 registers the highest growth. Then why is Q1 the best quarter for Indian GDP and not Q3?
So firstly, we have to be very careful when we are saying Q1 and Q4, Q2. Are we talking from the perspective of calendar year or fiscal year? So if we look at simply calendar year, okay, so where January to March is our first quarter and October, December is the end of the quarter. So for the US, October, December is the best quarter, because at that time you have Christmas and other festivities that tend to give a boost to consumer spending. In our case, what happens is that it begins from this fourth quarter calendar year, October, December, but it reaches its peak at January to March. So our best quarter is January to March, because it also coincides with the end of the financial year, when the closing of books happen. So at that time, because the accounts have to be cleared, all the spending, all the pending decisions have to be completed in this financial year. Therefore, we see it starts from October, December quarter, but the best quarter out of all the 4 quarters, from the perspective of Indian GDP, it is the Jan to March quarter. So that is the Q1 if we talk about calendar year. So that is the distinction.
Thank you so much, Radhika. That is all we have in this episode of Macro Sutra for today. Thank you so much for joining us.